in suppose year in 2017. In 2017, it will be recorded at cost price. What happened? In 2018, its market value becomes 5,20,000. As per cost concept, you will not consider market value of the asset. You will only consider cost. So it will be recorded at 5 lakh. And then you will go on charging depreciation. On fixed asset, you charge depreciation. So by following the method which is applicable by the Income Tax Act, which is allowed, you will charge depreciation on 5 lakh at a particular method, and then you will record the asset at cost price always. You will never consider market value. That is called cost concept. Initially purchase cost and then after depreciation. But market value will not be considered. That is called cost concept. Now next concept is going concern. Actually this is assumption. Going concern concept is basic assumption of business. What is the assumption? The business will go on and on for a very long term. So you must be knowing that certain companies have completed more than 100 years. How it is possible? Because it is assumed that the business goes on and on for a very long period, though the owner changes, though the owner dies, though it will take over by another person, but it is the basic assumption. Now, how it is applicable? So, whenever any transaction is made by the company, any contract, any agreement is made by the company with any other company or any other business, what is done? It is basic assumption. We do not consider it also. So, the assumption is the business will go on and on for a very long period of time. Without this assumption, lease contracts of 100 years are not possible. When there is any long-term agreement, we use this particular assumption. So it is the basic assumption that the business will go on and on for a very long period of time. So the contracts of more than 50 years, 100 years lease contract, all these are possible only because of this assumption. Next is dual aspect concept. Again, this is the basic principle of accounting. You must be knowing that accounting is debit and credit. So what is debit and credit? Each and every transaction has two aspects. So it is called dual aspect. You have to find out the two aspects. Then you have to logically apply the accounting rules, and then you have to pass the journal entry. Now, for example, purchase goods of rupees 12,000. What are the two aspects in the transaction? You have purchased goods, so you have received goods of 12 lakh, but you have to pay money worth rupees 12 lakh. So goods are coming in, cash is going out. So the business will receive something and the business has to pay something, give something. This is called dual aspect. Each and every transaction has two aspects and then they are segregated as debit and credit. This is called dual aspect concept. Next is accrual concept. Actually, there are two systems of financial accounting. First is cash system and second is accrual system. Now, as per cash system, when the transactions are paid in cash or received in cash, then they are recorded in the books of accounts. And in accrual system, when the transactions are due or accrue, they are recorded in the books of accounts. Actually, legally, accrual system is allowed in or followed by all businessmen in accounting. So, what is accrual system? Now, for example, paid rent rupees 25,000 of June. Suppose the month of June is going on and you have paid rent of 25,000. What does it mean? The transaction accrues in June and paid in June. So it will be recorded in the books of accounts. But how it accrue? Now suppose we will change the transaction. Paid rent rupees 25 of June in the month of July. Now what you will do in the month of June? As per cash concept, you cannot record this transaction because you have paid cash in July. But as per accrual concept, as the rent is due in June, it will be recorded in June. Now, why this system is followed? Because due to this system, you get accurate figure of profit. Otherwise, there will be mismatch. So, accrual system is followed in the financial accounting. So, as per accrual concept, what you do when the expense or income accrues, it is recorded in the books of accounts. Cash paid or not, cash received or not is not considered. When it accrues, it is recorded. Now it is a related concept. Matching of costs and revenue concept. Now this is continuation of accrual system. For a particular financial year, you have to match both costs and revenue. And if they do not match, you have to make adjustment. So for example, rent of March paid in April. Now in India, we follow the accounting year 1st April to 31st March. This is the accounting year we are following, and the basic aim of financial accounting is to know the profit, to find out the profit or loss and assets and liability of this particular year. Now, listen carefully. Rent is of March, but it is paid in April, next financial year. But as per accrual concept, rent is of March, so you have to match it here. Rent is matched with March, but as it is paid in April, you cannot pass journal entry. The transaction has to be completed to pass the journal entry. So here you will make adjustment and it is called outstanding rent. If you do not consider the rent here and if you record it in April, the figure of profit will go wrong. So you will make adjustment of outstanding rent. Same way, the expenses which are prepaid or income received in advance, outstanding income, all these adjustments are made under this matching of costs and revenue concept, and the accurate figure of profit is calculated. Now one more concept is there.